A few months ago, some research came across my desk, and I'd never seen anything like it before, and it was from a company called Bell Curve Trading. It was a really interesting way of looking at markets, a whole new technical analysis framework that I hadn't seen before. So I wanted to talk to these guys and find out how they did what they did and get some of their views on markets. So today, Bill Strazzullo is going to join me. He's one of the partners and the chief market strategist for Bell Curve Trading. And we're going to dig into the framework, how it all works, hopefully give you guys some ideas in understanding the framework. But then I want to get Bill's thoughts on some of the markets. He's been particularly vocal about some of the currency markets, fixed income and commodities. So we'll sit with Bill and see what we come back with.
One of the things that really attracted me to looking at markets and just focusing on the math and statistics, and there is an underlying rhythm to these markets. It's based on math and statistics. It takes a lot of that out of it. So even though when you look at the world, you look at Trump, you look at Brexit, all these things that tell you, that you should be careful and the market has, big potential on the downside. We don't see any deterioration in any of our models right now. So the equity markets look good. The S&P still has more upside, and I think that even overseas, I like those markets even better. If I had to rank them, I like the FTSE best. FTSE and Nikkei probably 1 and 2, DAX 3. I'd put the US after that. And then the other major market we follow, because we do a lot of business in Canada, is the TSX. So when we look at our models, even though there's a lot of things to worry about, there's no deterioration in the trends in these major markets. So we're telling our clients we want to be long here, and until we see some of the shorter term trends break down, because these things are like dominoes. It's not like all of a sudden the long term trends end. It's the short term trends fall, then the intermediate, and then the long term. So you've got to see the deterioration in the short term before a red flag goes up. And we don't even see that. So we're going to stay with it in the S&P. Our next target is 2,500. As I said, I think some of the foreign markets have even more juice. I could see the FTSE trading to 8,700, 9,000. I could see the DAX 13,800, 14,000. I could see the Nikkei trading to 23,000. So right now in the equity world, there's nothing to say to get out.